Burgess and I are going to a talk tonight. I think it's on conscious parenting, basically how to be better parents. And what's so interesting about being parents is you're always learning, right? It's not as if you can read a book or acquire some content, and once you have that book or that folder or those notes, you then become this, that's it. I don't need to learn anymore. I don't need to learn how to become a great parent. It's really kind of being a lifetime learner, and constantly being reminded or how you can do something better or different. And of course, most of the parenting is really about you. It's really about how you can learn about yourself and manage your own issues and demons so you don't implant them any more than you have on your kids. So tonight, that's on a Friday night, very exciting date night for Burgess and I. We're going to go to a conscious parenting. But I really do see parenting as that, as a kind of a lifetime learner, and all the kind of people I really respect and know, they kind of approach this way of parenting where they're always learning, they're always looking to be better parents, which I think really means they're always looking to be better people and better humans. And that kind of leads to me also being a lifetime learner of the stock market and investing and money. It's never something you just acquire once and say, okay, I got it. And so that kind of dips into our theme a little bit this week. Hey everybody, this is R.C. Peck. This is my weekend podcast where I talk about investing, making money, earning money, getting income, but probably most importantly, what underpins all of that is really the behavior we have that drives our investment and money decisions. And the theme for this weekend is everything is a cycle. Everything. Now, underneath that, it's this idea that you continue learning and you're this lifetime learner. But the one thing I come back to time and time and time again is that really everything in life, and we'll just talk about the stock market, everything in the stock market is a cycle. Yet, conventional thinkers, big box advisors, maybe even independent advisors, they don't want us to believe that things are a cycle. They want us to believe that things are random and crazy and they know best. They're the experts that don't have to bend or yield to the laws of the universe, and they can kind of just pretend they're above nature. And cycles is a part of nature, and the stock market is a part of nature. Now, that may sound weird to you, or you may immediately get like, yeah, I get it. There are hundreds of millions, if not billions of people's opinions, humans' opinions in the stock market. It is nothing more than the measurement of this one type of animal on this planet. And probably what it's measuring is just its emotional need and demand of wanting to belong and not belong and being feared and having greed. But we're taught that things aren't a cycle, that everything is just kind of random and there's no way to plot and look at patterns. But I believe in doing things the right way. And when you believe in doing things the right way, you follow the evidence. And the evidence says that actually things are not random. Things kind of run in a cycle, whether you're looking at the entire investment world, or you're looking at an index or indices or sectors or an asset class or an individual stock or an option price. Things are cyclical and there's cycles within them. And I want to point that out, that this goes on in all four of the places you can invest your money on this planet. There's not a fifth place to invest your money on this planet. If you're investing your money, if you have your money in cash right now in your local currency, that's an investment. And these are the only places you can put your money in the world. And the reason I bring up this screen, this image, is because people overcomplicate how difficult things might be in the investment world. And in fact, they're pretty straightforward. Your money's either going to go into companies, currencies, physical assets, or debt. That's it. And within each one of those sectors, you can drill down and go into U.S. currencies or fiat currencies or hard currencies. You can go into soft commodities, hard commodities. You can go into real estate if you're in physical debt. You can go into government debt, personal debt, municipality debt, corporate debt. So you can drill into each one of these, but there's patterns, and when you do things the right way, you just follow the evidence. And so the evidence says that things are very cyclical. There's a cycle in investing, and I want to kind of point this cycle out to you. Now, if you look at this screen has 4 sections to it. In the upper right section up here, it says leading. So when a stock is up here, and BIB is a ticker symbol for an exchange-traded fund that trades the biotech industry. But when a ticker symbol is up here in the leading, that means it's leading the market against the S&P 500. That's kind of the baseline. So when you see something up here, it's baseline. Sorry, it's beating the S&P. It's moving past what the S&P is doing. And then oftentimes it'll move down to weakening. It'll start slowing down. It'll start moving slower than the S&P. And then it'll really start to be going against it, actually falling, not just falling harder than the S&P, but actually moving in an opposite direction. Right? It's kind of moving through the cycle of leading to weakening to lagging and then to improving. And then when it improves, kind of the fourth quadrant, then it moves back into leading. And this is the cycle of all stocks that are trending up and all sectors and all asset classes. And just showing you, and this is an actual plotting of the ticker symbol BIB, where it started as leading the whole entire market, then it started lagging and weakening down here, then it started lagging the entire market, then it started improving again. And this is such a great way to see how you have these cycles. You could call leading springtime, then you call this summer, you could call this fall. I guess it improves into winter too. So the next thing I want to show you is what this actually price chart looks like. So if you look at this, you can see that these were the periods where it was weakening and lagging and then improving. So it came into it outperforming, then it started weakening and lagging, all right? Then it started improving, and then it was leading again, started weakening, lagging, then it started improving, then it started leading again, leading, then guess what? It started weakening, lagging, improving, and leading. This is what happens with all investments. And you want them to fall because there's the opportunity. It's not in spite of the fall, it's because of the fall that people invest this way who do really well. And so you almost want to embrace the correction and look for the correction because that is part of the cycle. You want that to be part of the cycle. You should applaud and reward that things go on sale. And this happens hundreds and hundreds and hundreds of times a year in the stock market. It is so common. The thing you have to know, though, is sometimes you're going to have to go against the crowd. You're just going to have to do something, go in a slightly different direction for a little bit. That's what your cost is, right? Your reward is a portfolio that does really well, a future that has security and freedom. But what you have to pay out is maybe not belonging for a little bit of time, because there is really no free lunch. So you have to pay with that kind of that not belonging, swimming against the current. The one thing I really want you to take away this weekend is not just that there's cycles, because you may have heard that before. You may see them and go, you know what, I'm starting to get that there's cycles. But the biggest thing is really that sometimes complicated questions like, how do I effectively grow my money in the stock market over any 3 to 5 year time period, regardless of who is the president or who is the chairman of whatever central bank in the world. But that could be a very complicated question looking at economic information. But sometimes complicated questions have really simple answers. And in this case, the simple answer is what drives everything in the investment world is this cycle of outperforming to weakening, to lagging, to improving, to back to outperforming. And if you just allow yourself to be able to see that cycle, then you can kind of surrender to it and allow your money to grow much, much, much better than all the big box advisors say you could never do. Hey guys, this is just another step in the process to helping you get a more secure future, more secure money, and more choices in your future. Until next time, this is RC Peck.